Well, hello everyone. It's Monday, it's August 5th. I just got back from New York last night with the family, saw The Lion King. It was fantastic. Now, I hate to say I told you so, but boy oh boy, did I tell you so. We lost, I think, 500 points last week on the Dow, and right now we're about to open down about 350. Futures are down. Why? Because of China. Nothing has been worked out. Nothing has even come close to being worked out. And that's an issue. And I've been talking about that nonstop. If you guys look back at the videos I've been making last week and the week before, I kept telling you the market is overstretched, momentum levels are overbought, and stocks are expected to go down. And they did last week, Thursday and Friday, and they're expected to be down a couple hundred points at the open today. Now, I am seeing minor support. We'll get into it in a minute. Again, China right now, let me look at this. Let me show you this. China currency sank to 11-year low against the dollar. Fueled concerns, Beijing is using the yen as a weapon in escalating tariffs. So none of this is good. It will get worked out. Markets will begin pricing in the majority of what's happening very soon. I think we're only about 3.5 to 4 points away. We were about 10%, not points, 3.5 to 4% away. When all of this started, we were about 13% away from fair value. Last month, we were about 8% away from fair value. Now we're about 3.5%. So we're already getting closer to fair value. That is the silver lining. Now, earnings, 388 stocks out of the 500 S&P have released already. From this point on, smaller stocks are going to report. The big caps are mostly out. Surprises, well, consumer staples and financials beat earnings per share and estimates by a long shot. The rest did not. All in all, earnings per shares are up about 0.8% on 4.3% higher revenue. In line with estimates. On the lower end, nothing crazy. Technically, let's look at the futures right now. Let's look at E-mini S&P. Wow, 364 on the Dow and 43 on the E-minis. We're down right now. That's a lot. Near the lows based on overnight. And this may be an overreaction or a bounce. We'll probably go higher, but important. Now, let's look at some levels. Remember I told you there's going to be strong support right around the 2,900 or the 290 level if you're trading the E-mini. If you're trading the SPY, the SPY is the ETF. Here, let me show you the SPY. That's the SPY. And as you saw here, I predicted a support right around the 290.99 level. We're going to open a little lower, but again, I'm expecting us to bottom right around the 290 level and head back up. Now, the question is the bounce that's upcoming, in my opinion, temporary or permanent? I believe it's temporary. We may see some sideways trading action, more congestion. Don't expect too much upside. If we do get a bounce, that's going to be looked upon as an opportunity to sell, not to buy. So right now, we're in the congestion sideways range. Look at the 290 on the S&P, on the SPY, and if you're looking at the futures, we're already below that. But again, we haven't opened yet. This is overnight data. So I'm looking at support right around here, this level for today's session. And again, if you go back to last week's videos and the videos from a week before that, you will see that everything that's happening in the market right now, I predicted with 100% accuracy. I'm not kidding. Just look at the videos. They'll tell you that. I was expecting everything that happened. Fundamentally, the big report for this week is jobless claims. We're expecting, I believe, let's look at the consensus, about 215,000 on Thursday. That's in line with estimates. Nothing major there. I don't believe the number will be too far out of the ordinary, out of the range. The range is between 206,000 and 218,000. Again, anything between that range, 211, 215, it's within range and it's within the moving average, the long-term moving average. So I'm not expecting anything major there unless the number is extremely low or extremely high. I'm not expecting that, especially during this period of summer when things are a little slower than usual and there's not that many surprises. Again, the big factor is the S&P. When are we going to see support? I believe we're right near support level. Let's look at momentum levels. I believe they should be. This is what I looked at last week to give me a good idea if that the market is overbought. Momentum levels. Let's look at them right now real quick. That's the broad market. Let's look at the S&P 500. Now only 47% of stocks are overbought in the S&P 500. We're definitely coming off. Let's look at this chart. Let's look at a longer term chart here. And this is what we were right here last week, and I was expecting we were going to come down, and I'm still expecting us to come down here. So we still have a little bit more downside left. Don't expect a raging bull market. Don't expect too much more downside. Things are being priced into the market, including China. What we're seeing is panic selling, and tomorrow we'll cover the put to call ratio, and I think we're going to have a nice bounce. Again, choppiness, more volatility, possibly a little more downside, but I think we're near the bottom in the medium short term. I'll talk to you guys later, and I hope you have a wonderful week.